Welcome back, everybody. Why there is a good probability that Ethereum is about to make a bounce. First of all, as you can see here, we're looking on the macro picture here. We're now tagged 1700. This is major level for Ethereum. It was bouncing from it in the summer, in July, bouncing in June, and bouncing in May. Never broke below it. Remember that. Never broke below it once it passed it, okay? So this is important to note. Now, you can see here, it's still holding this level, and it's bouncing. Looking on the 12 hourly, you get a nice hammer here on the 12 hourly, and we're bouncing from it. So that's good. Another thing I want to show you is on the daily chart. As you can see here, we have a very nice bullish divergence. First of all, let's open the RSI. All right. As you can see here, we have a little bullish divergence here. Market make lower lows, RSI making higher low, and we have a bigger one from here. You can see higher low on the RSI, market make lower low. So you have a double bullish divergence also from here, from May till today, and also from January to today. So that's a double bullish divergence. Okay, and this is a critical support we're bouncing from. It's a support for Ethereum going all the way here. So you have a double trend line support, that one and the big one, okay, double trend line support after it made a lower low, a nasty possible fake out to the downside. Okay, so that could be a short squeeze right now that is cooking. Okay, we make actually a lower low, and if the market going to reverse, it's going to be pretty much a fake out to the downside. So that's usually a good thing to have when you get in a reversal. Okay, so watch Ethereum. Obviously take profits along the way if you buy that. By the way, it's not a financial advice. I bought it today at around the 1780 area ish, but I have my stop here. Okay, so I don't mind. I have my stop here under 1700. Okay, you never want to put it at 1700. A little bit less, you know. Don't use round numbers if you use stops. Always use stops in these markets. And I have targets all the way up. Okay, I'm taking profits along the way because that's how I roll. I always when I enter a position, you want to have stop loss and you want to have targets. That's how you make money and protect yourself from big moves to the downside. All right, guys. So Ethereum, very high probability of a bounce. Also, it coincides with the bounce on the SPX. Okay, look at the SPX. Look at S&P double bottom. Weekly candle is going to close in the green probably. And maybe we'll take this wick here at 4100. That's the SPX, the S&P 500. You know, if it's going to close like that, we'll get more buyers to crypto because Wall Street control crypto and Wall Street trade based on the S&P and the NASDAQ. You can see the NASDAQ as well. Boom. Look at the NASDAQ triple tailing candles here. You can see we have the tails on the lows. That looks like it's going to bounce after a 7 week of sell-off. So again, markets going to bounce. Ethereum will recover with it. We'll have a bounce. So this is an amazing trade for Ethereum, in my opinion, to take 20-30% gains from where we are. Easy peasy. That's a blessing. So yeah, put Ethereum on your radar. I'm already in. Thank you very much for watching. Leave a comment down below. What's your price target for Ethereum? Do you think we're going to bounce now, or do you think we're going to crash further before we're going to get any kind of bounce? And give us a like and subscribe to the channel. And by the way, if you want to join our trading group and never get wrecked in the crypto, because you will always have a stop in place on all your positions, so you can go to the link in the description right here. Choose a tier. We do market updates every day to keep our group level headed. We always talk about possible scenarios, always talk about where we put our stops. Always keep everybody level-headed so no one lose money. The only thing we do is looking at how to make money. And so if you want to join our trading group, this is the group. See you in the next one. Cheers.